Hi, welcome to Retiring Well. Folks, we got a great show lined up for you today. There's something that came out of the American Rescue Plan in March of 2021 that you're going to want to know about because it concerns subsidies for the marketplace insurance. So if that's you, you're going to want to pay attention. We're going to talk about in-service rollovers. Basically, when can you roll out of a 401k and go into an IRA? When do I need a trust? We're going to give you some reasons why that may be the case. PE ratios, we're going to talk about those. And then finally, going to talk about cryptocurrency. So many people asking, should I or should I not get into that? So we're going to talk about that as well, so stay tuned.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Hi folks, listen, out of the American Rescue Plan that came out in March of 2021, there's some things that you definitely want to know. Now, Ben, you're my son, all right? You happen to work here at Centennial Wealth, and you are right now specializing in the health insurance area, right? And you brought this to my attention, and folks, this is something you're going to want to pay attention to, because if you're out there getting the marketplace insurance and you're receiving a subsidy, then you're going to want to hear this story. So Ben, tell the story. You had a couple come in, they heard something that came out of this plan, and then you were helping them.
Yeah, so interesting story. We had a client who gave us a call. They were looking for, had heard about this American Rescue Plan, had a friend who told them, hey, we saved $200 very easily, gave us a call. I met with them the other day, found out to be very easy. We went right onto healthcare.gov, and from there we were able to get them reapply for the same plan they were already in. Within a 10-minute time frame, we had them signed up, and lo and behold, they were able to save themselves $200 as well.
Right. And when you told me that story, I was like, I didn't ever even hear that came out. So we have, folks, there's a lot of you out there that are getting this subsidy, and all you have to do is go on the site, right? And we're going to post that up. If you go to the website, hopefully you can remember your username or password, right, so they can log in. But if you can't, I understand you can actually call too, right?
Yep, so they have a 1-800 number. You can find it right on the front page of healthcare.gov. And from there, they can help you reapply right over the phone. In the case of these clients that had come in, they had forgotten their login, hadn't used it in a long time. So we tried getting them logged in. We weren't able to do that. Had them call the 1-800 number that's right there on the page, and they were able to help them, a representative, right over the phone.
Awesome. All right, so we're going to post both the website and the 1-800 number up here on the screen. Now, folks, if that's you, certainly, if you want any help with this, you want to give us a call. Ben would be glad to help you with that. There's another group of you out there, though, that did not qualify for the subsidy because your income was over the threshold. Well, something else that came out of that plan was that they raised that level. So, you know, where it used to be 400% of the poverty level, it's now like 1,300% of the poverty level. So if you weren't getting the subsidy, you may want to go into the site and calculate whether you qualify for that subsidy. So that is definitely an actionable item that they want to do, right, Ben?
Absolutely. A lot of value there for people who normally wouldn't qualify or prior to this plan weren't able to qualify. A lot of additional folks now who are going to be able to qualify for this special premium.
All right. So folks, hopefully you found that valuable. If that's you out there, absolutely give us a call. We'd be glad to help.
Professional fishermen have a game plan. Knowing what lures and what bait to use is key. As you can see, we aren't professional fishermen, but at Northern Michigan's Centennial Wealth Advisory, we are professional financial advisors. And just like a good fisherman, we have a plan, a holistic approach for your financial future, using income planning, tax planning, estate planning, wealth management, and healthcare planning to help you plan to retire well. We have lived in Northern Michigan all our lives, and we have offices in Traverse City, Gaylord, Petoskey, and Cadillac. Give Centennial Wealth Advisory a call or visit us at cen-wealth.com and let us help you plan to retire well.
Hi, welcome back. Listen, in this segment, I want to talk to you about what's called in-service rollovers. If you're in a 401k plan, maybe a 403b plan at your job or your work, what you're going to want to know is it possible for me to roll that money over from my 401k, 403b into an IRA, or even my own existing IRA if I have one? Knowing this is very important. Now, many people believe that they have to wait till they're done working before they can do that. But you'll be pleased to know that a lot of plans will let you do it before you're done working. Some will say, well, you can do it at any time, which would be desirable. Some say you might have to wait to a certain age, let's say 59 and a half. And again, like I said, some might make you wait till you're done. But knowing whether you can do it or not is going to be very important. Why? Well, as you're aware, when you're in a 401k, 403b plan, your investment options are going to be limited. The plan administrators do this because they don't want you to have 1,000 different choices. That makes their administration much, much harder. So they're going to limit how many choices you have. But what if I'm somebody who wants more choice? Maybe I don't like the choices they've given me. Then I'm going to want to maybe get it over into an IRA where the whole world is available to me. Because anything an IRA can be invested in is going to be open to me. My choices become greater in that environment. So it's going to be important for you to call your plan administrator, find out. The question you might want to ask them is say, listen, I have an IRA. When am I allowed to take my money from my 403b, 401k and roll it over into the IRA? And they're going to tell you when you can do that. So knowing that is going to be very important. Now, a lot of people will ask this question. Larry, if I do that, do that rollover, is that going to create a taxable event? I can assure you that that is not a taxable event. When it's a rollover, it's going from one custodian to the other custodian. You're never receiving the money. So in that kind of event, there's no tax consequences. As a matter of fact, there's not even any reporting that has to happen because you never took custody of it. So again, check with your plan administrator, see what they allow, and then if you're somebody that can do it or wants to do it, then give us a call, because then we can show you those investment options that you might not have right now that are available in an IRA. I mean, you can have an IRA invested in gold. You can have an IRA invested in silver. It can be invested in real estate. There's a number of things that it can invest in, may be more appropriate for you under the circumstances. So give us a call.
Boy, that was really valuable information there, especially for you folks out there that are on that marketplace. I mean, those are the reasons why we believe here at Centennial Wealth Advisory that it's really valuable to have a financial advisor and have that relationship. You know, for yous out there that do not have that relationship yet with a professional advisor, you're kind of on your own with these issues and you're tasked to go find these out. Here at Centennial Wealth, we have many different people with different specialties allowing us to focus on all these areas to help you plan to retire well. You know, then Larry got into talking about in-service rollovers. Another thing that a lot of people don't know what their options are. It seems like a scary topic. You know, if I do this, what happens, and all this sort of stuff. You know, John, there's a lot to it, but we really can make it simple.
Yeah, and I was just meeting with somebody last week, and they're in a situation where they have a large amount of their company stock within their 401k plan. So we were able to talk through, and they're several years away from retirement and in their early 50s, but we had the conversation about, well, maybe it'd be wise to look at further diversification within your 401k plan. And they fully agreed, but they were limited on what different investment options that they have within their 401k. So we were able to call their 401k provider and learned that they had this ability to do an in-service rollover, which essentially allows them to move a portion, now not all of their money, but a portion of their money out into a traditional IRA, and then it opens up the number of different investment options that they have with that money. And so they would still continue contributing into their 401k and still investing the same way that they have, but it allowed them the opportunity where then we were able to work together and start building an overall retirement plan for them, as well as further diversifying their portfolio beyond just what their 401k plan options offered. So again, if that's something where you're in a position like that or unsure whether this in-service rollover is an option for you, then I definitely encourage you to call your 401k provider and just ask them, do I have the ability to do an in-service rollover to an IRA?
Absolutely, John. You know, in developing that professional relationship to help you plan to retire well and working on that retirement plan. If that's someone out there and you'd like more information on this or would like to have a conversation with us for a free, no obligation visit, call the number on the screen. We'd love to sit down with you and help. Stay tuned, because coming up next, we're going to talk about when you may need a trust.
Will your money last as long as you do? Check out our free instant download on sen-wealth.com on the key financial challenges that can make or break your income plan in retirement. To receive this instant download, simply visit sen-wealth.com, scroll down, and click Download Now to receive your copy of Will Your Money Last as Long as You Do? Simply visit sen-wealth.com.
If you are retired or soon to be retired, let us help you plan to retire well. Centennial Wealth Advisory specializes in retirement planning and has offices in Traverse City, Cadillac, Petoskey, and Gaylord. We'll never pressure anyone to become a client. Our goal is to inform and educate. Simply attend one of our live events or schedule a meeting at one of our Northern Michigan office locations for a free, no obligation retirement review.
Listen, in this segment, I want to talk to you about trusts. Now, I am not an estate planning attorney. We'll have these conversations a lot with our clients. We can at least kind of direct traffic. But I want to give you some reasons that you might want to think about a trust. Now, this is all encompassing. There's going to be several reasons, but I just want to give you primarily 4 that I can think of that you might want to be thinking about. First of all, most times people have a trust, and we use this in the past quite heavily when we are trying to avoid what's called estate taxes. Okay? Now, I'm not going to go into a lot of depth with that because today individuals can pass on a whole lot more than they used to be able to without any estate tax. As an example, an individual can pass on $11 million with no estate tax. If they're married, that's $22 million. Now, the only exception to that is IRAs, because IRA money has never been taxed. But that's not going to affect a whole lot of us, is it? Another reason you might want to trust is to avoid probate. A good estate plan is where all your assets know where to go when you die. All right? If they all know where they got to go when you die, then nothing has to go to probate. That's a good estate plan. It used to be that some assets had to be put into a trust to avoid probate. Okay, for example, a house. But today, with the use of Lady Bird deeds, we can set that beneficiary designation on the house so it knows where to go when you die. Doesn't necessarily have to go through a trust. But there may be assets that you need to put into a trust per se for that reason. Another reason you might want to trust is maybe you have a beneficiary that has special needs, and they're not allowed to have certain assets, or it affects their, let's say, their aid. Well, you might be able to put that into a special needs trust whereby it doesn't count in their assets, but it's money that still can be used for their care if they need it. Now, another reason you might want to trust is if you want to make, let's say, distribution elections after you die. Okay, now think about this. If you pass away and you leave somebody a lump sum, they have full access to that lump sum right away for whatever reason. What if it's somebody that doesn't handle money very well and you're concerned that they would maybe make bad decisions accordingly with it? Well, if you put it into a trust and then dictated how they could use that money, like maybe for just education, health, maybe their living expenses, then a trust would be appropriate for that. Maybe you have a younger beneficiary that couldn't handle a lot of money at the age they're at right now, and maybe you want to put it out there so that they have to wait till a certain age, let's say maybe like 30, and they might be more established. This is how you can make those distribution elections in a trust. So I hope that kind of gives you a feel for some reasons why you might need a trust. So I encourage you, give us a call. There's no cost, no obligation. Just sit down and talk and let us help you see where we might be able to direct traffic in helping you have a good estate plan.
During a market downturn, people tend to panic. That's a natural reaction to seeing your retirement savings decline right in front of your eyes. Take a deep breath. We can help. We recommend the following 3 steps. Number 1, schedule risk exposure review and make adjustments if necessary. Number 2, request a retirement income analysis to serve as the starting point for your retirement strategy, making sure your money lasts as long as you do. And number 3, develop a holistic financial plan. Call or click to request a free, no-obligation meeting, either in person or over the phone or video chat. We look forward to meeting you. Plan to retire well.
Welcome back. In this segment, I want to talk to you about stock buybacks. Why do companies do them? Well, one reason they might do it is to give their key execs some bonuses, right? They buy their stock back, give it as a bonus. But there's another reason sometimes they might do this. It's regarding price to earnings ratios. Now, just to show you how this works, this is a stock selling for $100 per share, all right? And let's say its earnings per share is $5. That's going to be a PE ratio of 20, the stock price divided by its earnings. Now, why is that an important number to understand with stocks or funds? Because the market historically is traded at about 16, 17 times earnings. So if you have a PE ratio higher than that, you might have one that's, maybe a little overvalued. What you want is a low PE ratio. So, take this company. It's got earnings of $4 million. It's got 100 million shares outstanding, meaning there's 100 million shares out there that people can buy or own. If you take the earnings divided by the number of shares, it gives you $4 per earnings. All right? So if I take that $100 stock price and I divide by the $4 in earnings, I'm now getting a price to earnings ratio of now 25. Now it's a little bit high, right? So what might this company do? Well, let's say it buys back some of its shares. So it's going to buy back, let's say in this particular case, just so we can understand it, let's say they buy back 20 million shares, all right? The earnings don't change. The company's still only making $4 million, but now they only have 80 million shares outstanding. If I do the PE ratio on this now, what am I going to see? If I take that 80 divided by the 4, now I'm basically back up to a PE ratio of 20. Now, why is this important to understand? In this corporate stock buyout, listen, my earnings didn't change. Was my company really any healthier? But by buying back that stock, it made me look like it was. Now, you're hearing a lot about this in the news, corporations buying back their stock. What would we rather see them do with those earnings? Well, pay them back in dividends to the shareholders might be a nice thing. How about they reinvested into research and development or capital expenditures that might make their company grow? Now, companies do that, but what the concern is and what you're hearing in the news is when they're doing this and it's not really improving their earnings much, maybe not so good. So anyway, I hope that kind of educates you a little bit on why they do that and especially how it's affected with PE ratios. Folks, we have the ability to take any portfolio and actually calculate as a whole what the PE ratio is of that portfolio. Very important to understand, especially if it's kind of way above the historic averages. So I encourage you, if you're somebody who really wants to know that, give us a call.
One thing I'd say that we can't stress enough is estate planning and how valuable that can be for your overall retirement plan. So often we're sitting down with folks and talking through you know, the income, the investment, the taxes and all that, and then it gets the estate plan and they sort of say, well, I'm going to get to that, or that's sort of something we've been talking about, but it always seems like it's one of those that people are hesitant to do, thinking almost that if they write that will or that trust, that then they're going to pass away. And so it's something we strongly encourage you to do, and I know there's a lot of different stories out there, the good and the bad of what you can come across when it comes to estate planning.
Absolutely, John. I mean, you're right. Exactly. There's so many folks come in and, you know, that planning for your own death is not a topic anyone really wants to do, but it's just vital. And you're not really doing it from yourself. You're doing it for the folks, your loved ones you're leaving behind. And that, you know, Larry went through 3 different examples of maybe why you maybe need a trust or may not. And there's a couple more out there too that we do come across from time to time. One, what if you have a whole bunch of beneficiaries, maybe children, grandchildren, nieces, nephews? Maybe this is a really long list. Nonprofits can even be in there. Some of these investment organizations, banking organizations have a limited number they allow. Well, maybe we need a trust for that reason potentially. The other one too is specific gifts. You know, a lot of folks come in and they have a very specific dollar amount or specific item or specific something they want to leave to a charity, to an individual. I really want my grandson to have this, whatever that is. If that's you, it's really important maybe then to have that trust in place so that you can make sure those individuals get those things properly, not through probate court, not through fighting with families, hopefully, and just do that. We've seen so many situations, like John said, both the great and the bad on these, when people either don't plan or they plan really well. It can make all the difference in the world.
Yeah, so true. And on the show as well, you know, we talk about a number of different things, and for example, these PE ratios or price to earnings ratios, and there's a lot of different language in this industry, as I'm sure that you've witnessed, and that's what we do here at Retiring Well. We want to educate you on a number of different topics so that when you go down to sit with your financial advisor, you're educated and understand maybe what some of those things are that are being communicated. So if there's certain things that we've been talking about here on the estate planning side or different financial planning tools and ideas, we'd love the opportunity to sit down with you for a no cost, no obligation second opinion. Stay tuned as we're going to be diving into cryptocurrency next.
At Centennial Wealth Advisory, we specialize in retirement planning. Folks, we put a show together every week that we talk about a number of financial topics that are critical in your retirement planning, from tax planning, estate planning, income planning, long-term care, health care planning, and investment management. If you missed the show, then you just visit our website, go to the media tab, and you'll see the latest show. Hi, listen, in this segment, I want to talk about cryptocurrency, all right? Now, we get a lot of calls on this, people asking, Larry, should I or should I not, you know, get into this? Listen, I thought it'd be helpful to just maybe talk a little bit about what cryptocurrency is. You got to understand that cryptocurrency has no physical form, right? It's digital currency, all right? It's not considered legal tender, but it's used in the exchange of goods and services. As long as you have somebody willing to pay in Bitcoin and somebody to receive in Bitcoin, then you can do that all day long. Now, the most popular one we think of is Bitcoin. Another one that's out there is called Ethereum, all right? Another one, Litecoin, which is used by PayPal, all right? The less common cryptocurrencies that you might hear about there are what we call altcoins. Probably the most one that's kind of been brought to attention of a lot of people is Dogecoin, right? You know, made famous by Elon Musk, right? Those are all considered altcoins. Now, presently, they're not regulated, all right? Now, that does not mean that they won't be down the road. But with cryptocurrency, purchases can be traced, okay? That's a misnomer. A lot of people don't think, well, it can't be traced, and that's why a lot of these illegal transactions are taking place. That is why they're taking place, but it can be traced. It's just not very easy to do it. Now, cryptocurrency is traded by what they call a blockchain, okay? Now, I'm not going to get into the complexity of what that is. Just understand that it's a way in which, you know, transactions are in blocks and they can be linked, okay? But for somebody to, you know, to get into a whole list of transactions, they have to basically break the whole chain, which is very, very hard to do. So that makes them, for the most part, somewhat secure. Now, although they're secure, okay, it's not necessarily safe to be in cryptocurrency. You know, you have market volatility, all right? There's no federal regulation behind this, so it's really more driven by market forces. So you can have huge, huge swings in this. The vast majority of cryptocurrency is really traded as an asset, you know, which is interesting to know. Most people are speculating on it and maybe growing in value. That's probably more that way than it is actually being traded. Now, cryptocurrency you can hold in what they call hardware wallets, okay, and then that's where you have the buying and selling. Now, if you want to speculate on cryptocurrency but you don't want to actually hold it physically, well, you can get it through the use of exchange traded funds, okay? You don't have to go out and buy a whole Bitcoin for thousands of dollars. You can hold parts of it in an ETF. Now, folks, if this is something you want to get involved in, I highly encourage you to get with a professional. Call us. This is something that is very volatile. It's something that you want to be very careful when you get into. So give us a call.
Wow, cryptocurrencies. You know, John, I don't know if I ever would have thought a day we were talking about this and all the complication that this has. I mean, it wasn't that long ago, I think folks just always carried cash. You know, then credit cards were a big deal, you know, and now the moneyless society or whatever, and now the blockchain and, you know, all this sort of complication that goes along with it, you know, and how quickly that's come about. You know, it wasn't that long ago we were on dial-up internet, you know, and now we're you know, having these blockchains and all of that. But, you know, I know one thing you've heard us talk about over and over again on the show here, and if you've come in and visited with it in person, and we talk a lot about planning and diversification. You know, this is one of those topics. It's really no different, folks. I mean, when you have this volatile of an asset class out there, when you're looking at investing, how does this fit in your plan? You know, I know, John, when you're building a plan for folks, it isn't like you're ever going to invest. Anything goes all into something, and this is definitely that case.
Yeah, so true, Art, and that's the key word. I think he said it well, diversification. I mean, when you're building any type of plan, you want to make sure that you're diversifying the assets. When you're seeing a certain asset class go double or triple in a short period of time and then drop back 30-40% within a short period of time, that's something that would really catch my attention, and I'm a bit more of a conservative investor, and so that's one that would concern me. And so again, as we look at overall retirement planning, you know, we may even look at, oh, gold, silver, I know Larry had talked about briefly, maybe, oh, that's a 5 to 10% piece of your overall portfolio. You know, you want to be cautious when you're getting into some of those different types of investments that are out there. So again, it's one, it's a hot button topic right now, but it's one to be cautious. And again, that's where we encourage you to give us a call if you want to talk more about that and really look at your overall retirement plan.
Absolutely, John. You know, I think of the segment maybe we've done in the past, and you've seen us do this before, where we talk about goals, strategies, and tools. You know, this is just another tool that's out there that you can put money in and invest in. But the key is, what is your goal? What are you trying to accomplish? Is that retirement? Is that saving for your grandkids' college? You know, what are all those wishes you have? What strategies do you have in place to accomplish that? And then we can start putting tools together. Boy, I sure hope you enjoyed the show this week. We look forward to seeing you again back here next week on Retiring Well.